All right, someone's been busy. Looks like we've got a whole stack of financial documents here on damn capital advisors.
Prospectus filings,
Hmm.
even some industry analysis. Someone's really doing their homework on this IPO.
So for this deep dive, if you choose to accept it, your mission is to get to know damn capital advisors, like really understand them.
Not just what the numbers say.
Yeah, not just the numbers, but like what they actually mean. What's the story behind all this?
Exactly. We're going to help you cut through the financial jargon and pull out the important stuff and hopefully find some interesting insights along the way,
We're like your financial detectives, basically.
helping you get the real picture before you make any decisions.
So damn capital advisors, they're an Indian investment bank. Pretty big name from what I've seen.
Seems like it. The documents say they're the fastest growing merchant bank in India, by revenue at least, over the last couple of years.
Yeah, and their profit margin is right up there at the top compared to other firms.
Impressive. But what exactly does merchant bank even mean? It's not like they're giving loans to people at a market, right?
Uh-huh. No, no. From what I understand, they're more like the deal makers of the financial world. They help companies go public, give advice on mergers and acquisitions, even do some private equity stuff.
So not just helping companies raise money, but also helping big investors decide where to put it.
Right. And they're not messing around either. They handled a pretty big chunk of IPOs and QIPs in India last year.
Yeah, 12.1% market share for 2024 to be exact. That's way bigger than their closest competitor. Shows you the kind of influence they have.
Before we get carried away, though, let's look at the hard numbers, their financials. How's their money situation looking?
Well, they've definitely been growing like crazy, 67.24% annual growth rate from 2022 to 2024. But, there's always a but in finance.
So here comes the reality check.
Their expenses are going up too,
Yeah.
mainly what they're spending on employees and operations.
Yeah.
Makes you wonder how long they can keep this up.
Yeah, it's like they're driving with the pedal to the metal, but how long can they keep burning that fuel? Something to think about.
And here's something else that caught my eye. Their cash flow from investments went from negative to positive in the last year.
That is interesting. What do you think that means?
Well, it suggests they might be changing their investment strategy, maybe going towards assets that can be turned into cash more easily.
Definitely worth digging into that, especially if you're thinking about investing.
Absolutely. Now, working in the financial world, it's not exactly a walk in the park. What kind of risks are we seeing in these documents?
Well, the financial services industry is super competitive. Just attracting and keeping clients is a constant battle. Damn Capital's no different.
And with everything being digital these days, they're really dependent on technology. Imagine what a system crash would do to them.
Not to mention all the regulations they have to keep up with. Staying on the right side of the law in finance is a full-time job.
Oh, yeah. And speaking of regulations, there's something in here about Dam Capital having some trouble with regulators in the past. Warning letters, even some actions taken against them.
That
Doesn't seem like due diligence was their strong suit back then.
makes you wonder if they've learned their lesson and tightened up their processes.
Definitely something to look into, especially since even a small mistake in finance can have huge consequences.
All right, so we've got this overview of Dem Capital, their past, their present, and the risks they face. But to really get to know them, we need to dig into some of these more interesting details.
Oh, absolutely.
Yeah.
And this is where it gets fun. Did you know that Dam Capital started out really small? Back in 1993, they were just this tiny share broking firm.
Wow, from a small operation to a financial powerhouse. That's quite a journey.
And their board of directors, it's a fascinating mix of people from all sorts of backgrounds, not just your typical finance guys.
That diversity of perspective could be a real advantage for them, especially in such a complex industry. Speaking of interesting people, did you see anything about Jatin Doshi, one of their executive directors?
Oh, yes. The documents mention he's got a big deferred compensation payment coming his way next year, $1.75 million to be exact.
Now, why would that stand out?
Well, deferred compensation can sometimes be a red flag. It could mean the company is trying to hide financial problems. Something to keep in mind as we analyze their financials.
So we've got this picture of Dam Capital, their past, their present, the risks they face, even some intriguing details about their people. But to really understand where they might be headed, we need to zoom out and look at the bigger picture, the Indian capital market.
You're right. Their future is tied to the overall health of the market. And from what I'm seeing in these reports, the Indian capital market's in a pretty exciting phase right now.
Yeah, it seems to be experiencing some serious growth. One of the key drivers is this surge in retail investors.
Definitely. More and more everyday people in India are investing in the stock market. It's pretty significant.
What's driving that trend? Is it a temporary thing, or is there something bigger happening?
Well, there are a few factors at play. Household incomes are rising, so people have more money to invest. And opening a demat account, which you need for trading, is super easy these days.
So access to the market isn't a problem anymore?
Nope. And we can't forget about the digital revolution in India. Mobile trading platforms and digital payments have made investing more accessible than ever.
It's like the perfect storm for a booming capital market. A growing economy, a rising middle class that wants to invest, and technology making it all happen.
Exactly. And you can see that reflected in the growth of assets under management, especially in mutual funds and portfolio management services. Investors are feeling confident about the Indian market.
Which could be good news for Dam Capital if they play their cards right. But like we said earlier, the financial landscape is always changing. There are always potential bumps in the road.
Absolutely.
Yeah.
One thing we need to consider is the impact of regulatory changes. There's one in particular that could be relevant here.
You're talking about the new freedom given to certain investment funds, Category 1 and Category 2 AIFs, about their investments in infrastructure companies.
Right. That change could influence how money flows into the infrastructure sector, which is a key area of growth in India.
And since Dam Capital works across different parts of the market, those changes could definitely affect their business.
It's a good reminder that even in a positive market, things can change quickly and impact a company's success.
Now let's talk about the IPO. What can you tell us about how Dam Capital is structuring this offering?
Well, they're offering shares through two main avenues: an employee reservation portion and an offer for sale by current shareholders.
So employees can buy in early and some existing investors can cash out at least partially. Makes sense. What about regular investors, though? How can they get involved?
There are a couple of ways. You've got the traditional route with the ASBA process, where you basically set aside funds in your bank account specifically for the IPO.
And for the more tech-savvy investor?
There's the UPI method. It's a mobile payment system that makes applying for the IPO pretty straightforward.
Sounds like they're trying to make it accessible for everyone. Is there anything else potential investors should know?
Well, there's a lock-in period for some of the pre-IPO shares. Basically, some people, like company insiders, can't just sell all their shares right after the IPO. It helps stabilize the stock price and prevents a sudden crash.
Okay, so we've gone from a mountain of paperwork to a much clearer picture of Dam Capital Advisors, their history, their financials, the risks involved, even how the IPO works.
But here's the real question. What stands out to you so far? What are your key takeaways from this initial look?
That's a great question, and the perfect place to pause for now. You've got a lot to consider. We've laid the groundwork, but the real analysis starts when you bring in your own knowledge and perspective. What do you make of all this?
Exactly. They seem to have a good track record, a strong team, and big ambitions. But the financial world is always changing. What challenges might they face down the line? How could those challenges impact their plans for growth?
Lots to think about. We'll continue this conversation in our next session and see what other interesting things we can find out about Dam Capital Advisors.
Okay, so let's pick up where we left off and really dig into Dam Capital's financial performance.
Yeah.
Those revenue numbers were pretty impressive. But, we all know there's more to the story than just the top line.
Totally. A business can look great from the outside, but you got to look under the hood and see how well they're turning that revenue into actual profit.
Exactly. And that's where looking at expenses comes in. We talked about it before, but their expenses are definitely going up, especially employee benefits and operational costs.
And yeah, rapid growth usually means spending more, but it does make you wonder if this can really last. Can they keep growing this fast without hurting their profit margins?
That's the key question, isn't it? It's
Yeah.
not just about growth. It's about profitable growth. Checking out their operating margin trend would give us a better idea of how efficiently they're managing those costs.
Well, these documents seem to have a pretty detailed breakdown of their expenses, so we can definitely get in there and see where the money's going.
And remember, those risk factors we discussed. The intense competition, their dependence on technology, all those regulations, those can all impact expenses in ways you might not expect.
It's a complicated puzzle, but hopefully by really analyzing their financials, we can understand their financial health a bit better and see if they can handle those potential challenges.
Speaking of challenges, let's talk about something that you don't always see on a balance sheet: brand and reputation.
Oh yeah, in the financial world, trust is everything. A good reputation can be a company's biggest asset, while a bad one can be almost impossible to shake.
Dam Capital seems to get that. They've actually applied to trademark the Dam Capital brand name. Shows they're serious about building a strong identity.
Smart move. A recognizable brand can help them attract clients, bring in top talent, and just stand out in a crowded market. But building a brand takes time and effort, especially as they're trying to expand into new areas.
Absolutely. And they can't afford any mistakes. Remember those regulatory issues we mentioned? Any flip-up could seriously damage their reputation and the trust they've built with clients and investors.
It's a delicate balance. Protecting your own intellectual property and respecting the rights of others is crucial in any industry, especially one as driven by innovation as finance.
Managing their brand and reputation well will be a key factor in their long-term success. Now, let's zoom out for a second and think about the bigger picture. Those market forces that can make or break even the best companies.
We talked about the growth in the Indian capital market driven by things like rising incomes and the digital revolution. But markets are cyclical. They go up and they also come down.
Exactly. The documents even mention the inherent volatility of the Indian capital market. It's been going up lately, but there's no guarantee that'll continue forever.
And they also point out that their business is heavily influenced by the overall economy. Things like inflation, interest rates, and government policies. All of those can impact their bottom line.
And don't forget global events. Things happening on the other side of the world, like geopolitical tensions or economic slowdowns in other countries, can have ripple effects on the global financial system.
It's a stark reminder that even the most successful companies aren't immune to what's happening around them. Dam Capital will need to be flexible and adaptable to navigate those potential headwinds.
To really understand their performance, let's look at some of those key performance indicators or KPIs that Dam Capital uses to measure their progress.
Yeah, those KPIs give us a more detailed view of how they're doing in specific areas.
One KPI they highlight is their client base. They've seen a pretty impressive jump in active clients from 144 in March 2022 to 263 by October 2024.
That's a big increase. But it's not just about the numbers, right? It's about getting the right kind of clients, the ones that fit their services and have long-term potential.
You got it. And as they expand globally, building relationships with reputable clients with strong financials will be super important. They can't just go after anyone with money.
Another key KPI is market share. We already mentioned they have a 12.1% share of the Indian market for IPOs and QIPs, which puts them in a pretty good spot.
Definitely shows they can hold their own against the big players. But maintaining and growing that market share won't be easy. They'll need to keep innovating, offer excellent service, and adapt to what their clients need.
Especially as the Indian capital market attracts new competition, things are only going to get more intense.
Now let's talk about something that often gets overlooked, but is super important in finance: risk management. Dam Capital has a whole set of processes for identifying, assessing, and mitigating the different risks involved in their business.
So they're looking at everything from market risk and credit risk to liquidity risk, operational risk, legal risk, even reputational risk. It seems like they're trying to cover all the bases.
But they do acknowledge that no risk management system is perfect. There's always a chance of something unexpected happening or their assessments being wrong.
And in finance, things can change so fast. What seems like a manageable risk today could turn into a huge problem tomorrow. So while it's good they have a framework in place, we have to remember that no system is perfect.
Now let's go back to their people. Their board of directors, with their diverse backgrounds, plays a huge role in overseeing the company and making sure they're operating responsibly.
In the financial services industry, strong and experienced leadership is essential. They're the ones setting the strategy, overseeing operations, and ensuring good corporate governance.
And most importantly, they have a responsibility to act in the best interest of the company and its shareholders.
The documents give us some interesting details about the board's roles. For example, they highlight the audit committee, which oversees things like financial reporting, internal controls, and the relationship with the auditors.
That's a critical role, making sure the company's financial statements are accurate and reliable.
They also have a nomination and remuneration committee, which recommends new board members and decides how much directors and senior management get paid. Transparency in executive compensation is really important for building trust with investors.
And to make sure shareholders have a voice, they have a stakeholders relationship committee, which focuses on resolving any investor complaints. Keeping shareholders happy is key for any public company.
So it looks like they've got a well-structured governance framework in place, but like with any system, it all comes down to the people running it.
Absolutely. It's important to look at the experience, integrity, and independence of the board members. Are they qualified? Do they have a history of ethical behavior? Are there any conflicts of interest that could affect their judgment?
Those are all crucial questions to ask when you're evaluating any company's governance, but especially one in the financial world.
Okay, let's shift gears a bit and dive into the specific regulations that Dam Capital has to deal with. As we mentioned before, the financial services industry is heavily regulated, and for good reason. It plays a vital role in the economy, and the stakes are really high.
The documents highlight some of the key regulations they have to comply with, like the Securities and Exchange Board of India's merchant bankers regulations, which govern how they manage IPOs and other capital market transactions. They also have to follow the research analyst regulations, which make sure their research is objective and unbiased.
Right, and because they act as a depository participant, which means they hold and manage securities for clients, they also have to follow the depositories and participants regulations. And on top of that, they have to comply with the intermediaries regulations and the stockbrokers regulations, which govern their activities as a stockbroker. It's a whole web of rules they have to navigate.
Yeah, navigating all those regulations can be expensive and complicated. It requires a strong compliance team and a company culture that prioritizes doing things the right way. Any misstep could lead to big fines, penalties, or even losing their licenses.
So when you're looking at Dam Capital, it's really important to consider their history with compliance. Have they had any major regulatory problems in the past? Are they doing what they need to do to stay compliant?
Their past compliance issues do raise some red flags. Have they really fixed those problems? That's something investors need to think about carefully when assessing the overall risk.
Speaking of risk, Dam Capital is actually pretty upfront about the challenges they face and the things that could affect their business.
One of the risks they point out is their dependence on market conditions and the overall economy. As we talked about before, the Indian capital market is cyclical, and Dam Capital's success is tied to how well the economy and the market are doing.
Exactly. A market downturn or a slowdown in the economy could really hurt their revenue and profits. They're also exposed to what's happening in the global economy, and they specifically mention things like macroeconomic and monetary policies, industry trends, mergers and acquisitions, changes in regulations, even consumer confidence.
It's a pretty long list that shows just how interconnected the global financial system is and how events far away can have an impact on Dam Capital's business.
They also acknowledge that their dividend payments, which aren't guaranteed, could be affected by their future earnings financial condition and things like capital expenditures. Investors shouldn't count on those dividends as a main source of income.
And they're not afraid to talk about the risk of decreased liquidity, which is basically their ability to meet short-term financial obligations. If their liquidity goes down, it could hurt their business and make clients nervous.
They also bring up the risk of things like human error misconduct, inadequate due diligence. We know they've had issues with due diligence before, and they admit that human error can have a big impact, especially when they're dealing with so many complex transactions.
They also highlight that their risk management systems might not always be enough. No system is perfect, and there's always a chance of something unexpected happening or their assessments being off, especially in the fast-paced world of finance. And their reliance on technology also presents a risk. Any system failure or disruption could really mess things up.
They also acknowledge that their intellectual property might not be fully protected, even though they've applied for trademark registration. And they point out that they use some non-GAAP financial measures and KPIs, which might not be comparable to what other companies use, making it harder for investors to evaluate their performance.
They're upfront about potential conflicts of interest that could come from related party transactions, which involve dealings between the company and its directors, officers, or major shareholders. And they admit that their insurance coverage might not be enough to cover all potential losses.
And they're realistic about the fact that changes in laws and regulations, including tax laws, could significantly affect their financial statements. Working in multiple countries, each with its own set of rules, also presents challenges.
They even highlight the risk that investors in their IPO might not be able to sell their shares right away on Indian stock exchanges because there's a process that needs to be completed before listing and trading can begin. And there's always the possibility of delays.
I have to say, it's pretty commendable that they're so transparent about the risks they face. They've identified a wide range of potential challenges, both internal and external, and they're upfront about how those challenges could affect their business.
It's a good reminder that every investment comes with risk. But by carefully considering the risks that Dam Capital has laid out, investors can make more informed decisions about whether this IPO is a good fit for them.
All right, so we've taken a deep dive into Dam Capital's financials, risks, history, and IPO process. But we're not done yet. There's still more to uncover.
Let's take a break and come back to explore even more interesting details about Dam Capital Advisors. We're back for the final part of our deep dive into Dam Capital Advisors. We've covered a lot, but there are still some interesting pieces of the puzzle to look at.
Definitely. We've talked about their financials, their risks, their history, even the IPO process. But there's always more to uncover, right? Let's really get into the details of their operations and see what else we can find.
All right, sounds good. Where should we start?
Well, the prospectus goes into a lot of detail about their board of directors and those committees that help them run the company.
We talked about the audit committee, the nomination and remuneration committee, and the stakeholders relationship committee. But is there anything else interesting about how they govern themselves?
Actually, yeah. The prospectus mentions that the board has a system for evaluating its own performance. Basically, they regularly review how they're doing to see if they're meeting your goals and fulfilling their responsibilities.
That's a good sign, right? Shows they're committed to getting better and holding themselves accountable.
Definitely. Even the most experienced boards can benefit from taking a step back and seeing how they can improve. It's a sign of a mature and responsible company. And speaking of their history, the prospectus also gives us more details about their past acquisitions and mergers.
We know they've come a long way from their early days. Can you give us some specific examples of how those acquisitions and mergers have shaped them?
Sure. One that comes to mind is their acquisition of IDFC Securities back in 2020. That move really expanded their presence in the Indian capital market and broadened the services they could offer clients.
Ah, so that's a big part of how they went from a small firm to a major player in investment banking. Acquisitions can be a powerful tool for growth.
Absolutely. Now, on the topic of growth, the prospectus also gives us more information about their subsidiaries, including details about their operations and how they're performing financially.
We talked about DAM Asset Management Limited, which is still getting set up. Are there any other subsidiaries worth mentioning?
Yeah, their U.S. subsidiary DAM Capital, USA Inc., stands out. The prospectus says it's been profitable in recent years, which shows they're doing well with their international expansion.
That's a good sign. They're not just playing in the Indian market, they're making moves globally.
Exactly. The prospectus also talks about their properties, the ones they own and the ones they lease. It gives details about where they are and how big they are, which helps us understand their physical footprint.
It's like getting a peek behind the curtain to see how they operate. Knowing where they are and the size of their facilities gives us more context about their business.
And they also discuss their intellectual property, things like trademarks and copyrights. They really emphasize how important protecting their brand and innovations is for their success.
Makes sense. Intellectual property is a big deal these days. They've clearly taken steps to protect their trademarks and copyrights, but it's an ongoing process, especially as they come up with new products and services.
Absolutely. Now, they're also transparent about any ongoing litigation. The prospectus gives details about any legal proceedings they're involved in, so investors can understand any potential legal risks.
Transparency is so important when it comes to legal stuff. Investors need to know about any potential legal issues that could affect the company.
Agreed. And they also provide information about their employees, including things like compensation and benefits. It shows they care about their workforce.
Taking care of employees is smart. They're a company's most valuable asset.
Definitely. And they also outline their insurance coverage, all the policies they have to protect themselves from different risks.
It's like a safety net for their business. Insurance is crucial for any company, but especially in a high-risk industry like finance.
And they're upfront about related party transactions. They break down those dealings and explain how they manage any conflicts of interest.
Transparency is key there. Investors need to know those transactions are being handled properly and that the company's interests come first.
Exactly. And finally, they highlight their corporate social responsibility initiatives. They're clearly committed to being a good corporate citizen and making a positive impact.
That's something a lot of investors care about, especially younger generations who want their investments to align with their values. Knowing DAM Capital takes CSR seriously is a good thing.
Absolutely. Yeah. So as you can see, this prospectus is packed with information about DAM Capital Advisors. It goes way beyond the financials and gives investors a deep understanding of the company, how it operates, the risks involved, and its commitment to sustainability.
We've covered a lot in this deep dive, but we've only scratched the surface. There's always more to learn, and we encourage you to do your own research before making any investment decisions.
Remember, knowledge is power, especially when it comes to finance.
And that's your deep dive. We hope you found this exploration of DAM Capital Advisors insightful. As always, we encourage you to continue your own research and due diligence before making any investment decisions. Until next time, keep diving.